my mic coming in loud and clear or no? How is everyone? Did you guys have a good week? Good. Made a good one now, but I trying to work on the new stuff I'm trying to roll out. I missed my exit right here, so I did take one off as it turned up, but I meant to take a couple off at the median line. I just didn't realize it had already gotten down there so quickly. Yeah, anyway, and I missed my partial exit here this morning, flipping through. But yeah, this was a picture perfect trade when you look at the volume and everything else. Today we're just focusing on just the market geometry for those that only have the toolbar, as we do every Friday. But you know, when factoring in that relative volume, it's about as good as it gets right there. So I figure I'll just go ahead and hold the two. This area right here is also a very, very good area, probably from which to take a long. Still feels a little bit dangerous to me as we look at that 20-minute chart, which we'll do in a minute. At any rate, June 17th, 5 p.m. Eastern. Today we're going to cover some of the most recent setups that we've seen across a couple of different markets. I really only have a few examples drawn out, but I'm sure we'll find several examples as we dig a little deeper into this. But we'll cover the few that I've been working out over the past 45 minutes or so, and go over those. I figure we'll start with the one that I'm in right now. On these workspaces, the issue that you're going to have is with the rollover, and I'll try to send out some updated workspaces and templates with the rollovers from now on, so that it's not, you know, something you have to worry too much about. But it's really not that difficult. But let's start by doing that, since it is something you'll have to do, since we have rolled over to the 9 in the ES, the YM, the 6E, ZB, etc. And today or yesterday? Today in crude oil, we moved to the 8. So the template is still reading from the 6, from the June contract. So I've updated this workspace, the ES workspace, the fast, TTP toolbar, ES fast, June 3rd. I've updated all the charts to the 9, the September contract. Getting older and it just flies by. So you'll want to update each one of these within Bloodhound in the reader. So when you do that, you open up the Bloodhound template simply by clicking on TTP toolbar. This is the name of the template at the top. When you click on that, it opens the Bloodhound user interface, which is this, right? This is the solver tab. This is the logic tab, and we have the 4 solvers here. One's looking at the 20-minute, the 5-minute chart, the 1597 tick, and the 1 minute. If you want to just do it quickly and easily, you could do it from here, each one individually, but just go to the solvers and work your way down. So when you click on that 20-minute all lines solver, you see the indicator here under input, indicator, TTP reader, and then you click on that ellipsis right there. Yeah, Carlos, I don't use limits for the first or second order now. I'm getting into the trade, first contract at least, with market. I've missed way too many trades trying to limit in, and of course you're going to catch every single loser when you limit in, right? Think about it. You put in a limit order to short. If it's going to go against you, that short's always going to get filled. But 20-30% of the time, maybe even more than that, you're not going to get filled on those really fast, clean moves that just go straight in one direction out of your entry area. So if you enter that first trade, of course that would predicate you being able to trade multiple contracts. it would be dependent upon you being able to trade multiple contracts. So if you can, then I would recommend entering that first one market always, and then try to limit in if that's something you're trying to do. But anyway, when this is set to current workspace down here, read charts from current workspace, it's going to show you all of the available charts within that workspace. And you want to set the 20-minute solver to the 20-minute 9 as you've updated the charts to the current contract, and then just work your way down. Open that up, make sure that you select 1597 for the 9 and work your way down to the 5 and set it to chart type, the 5-minute ES 0916, and then OK, and do the same thing for the 1 minute. Okay, and that's it. And then you'll have the current contract in Bloodhound. Now what I've done is I've added this scroll, this S, synchronized scrolling to the charts, so that when I move, they all move in tandem. It's about 100 times better than Ninja's. What do they have here? A global crosshair, which is garbage. So use that whenever you're doing, historical work, back testing type stuff, going through different trade examples. Anytime you want to document, sorry about all the noise, this chair is just loud. Anytime you want to document setups, stuff like that, use that synchronized scrolling. And then what you can do after you have it on all the charts, you click on that S one more time and you see it highlights these bars. And if you want to get everything centered to where you can take a nice screenshot, you can drag it and center all the charts and then take your screenshot. You see? Okay, so what we do is we start with the 20-minute, then the 5, then the tick chart, then the 1 minute. All right, so what I did today, really what I saw first was the area reached, I think it was on the, I saw the signal and the volume on the 2 minute, and then, I saw this nice ABC up into the area. Of course, we had come back into this previous swing here. And then I started backtracking, and I went through the 20-minute chart, and I said, oh my gosh, we're right at that perfect area where the warning line is intersecting the median line. And as I was telling the guys in the room, that's one of the main signals we're going to be building out within that reader inside of Bloodhound. And I think I'm going to actually draw something on the chart when that happens. So I think the reader is actually going to be built into the lines themselves in that future version. It's going to be really incredible, but that's going to be one of the main signals, and I'll show you some other ones as we kind of work our way through this. But anytime you get a bar, and of course you want to be drawing from, good swings, but anytime you get a bar that is hitting one of those upper or lower median lines right where the warning line is intersecting it, the warning line of the trend channel, obviously, because the warning line of the median lines would be parallel to it. But right where that warning line of the trend channel is intersecting the median line, it seems to be a kind of a timing tool. And even if it's not touching, oftentimes where these lines cross, you'll get minor swings. It's just some kind of a timing thing. I don't know how or why, but that's just the way it is. So anyway, on the 20-minute, and there's probably more areas in this, but I've just simply drawn from the high to the high, and that's giving me that upper median line trade. That's just a standard Allen Andrews median line trade. and we've broken down and out, so it's in an impulse down, but see, we still haven't taken out this low. So really this could be just one big correction, and we've come down. It's a really big move up and out of that low yesterday. It's like all the markets did that. Came down, hit that 61.8, and then went up. And rather than going up impulsively, it's looking to me like it's going up correctively, as these waves are overlapping in here, and we've got a nice ABC, which was a very obvious one to me, I'm sure to everyone. So we've got that upper median line, right? Well, I drew it to here because of this wick on the 5-minute, but see, if I draw that same area on the 20-minute, we just have that low right there. So I just drew from low to low, and this was the main reason for me for the trade right here, is we're up to that lower upper median line and the warning line. All right, when I connect it more specifically using the 5-minute to the lowest closing price, the bar with the lowest closing price to the low, it gives me to the tick, that warning line, and then one tick through the upper median line. So that's a pretty good area. And of course it is an ABC back into a previous correction, and we have obviously a lot of what once was support is now resistance as we've broken through it. You see we broke through it here and pulled back to it. Came down, pulled back to it again. Couldn't take out that high. I was actually waiting for a bit of a throw over. I was going to enter a couple of more to just tick that high out by one tick, run those stops and then go, but it just took off from there. So, and you can see where it stopped at, right? It's not only the median line here, well, that's the same median line, but it's also the lower median line on the tick chart. All right. And that's how we find that first major high or low, right? Didn't we talk about that last training session? Or the training session before that, actually, right? How do you find that first high or low? You're using the previous major lows. You're using the ultimate low and the penultimate low to find that first major higher low, which is what leads me to believe that this could indeed be a major low, and I really wanted to exit there, the whole position. But by the time I had figured out we had already rejected off of it, we had moved a little bit too far, so I figured, well, I'll take one off and then let it see if it can't work itself out. So Mike is asking, after we draw, looks like we could start to draw circles around specific areas where we expect price to approach. Yeah, I mean, that's kind of what I do in the room. Historically, or I don't know when I say historically, I guess because I'm always talking about historical prices, but previously I guess for the sake of the room and, you know, continuing to talk, I would draw so much that I would be trying to kind of manufacture an area where price was currently, and that's really a no-no. You want to have your major areas in and then wait for an area to be reached, and as that area is being reached, then update your channels and market geometry on the faster charts and wait for that area of confluence and, you know, cross sections. So you want to have multiple areas coming together, as we have the major areas on the 5 and the 20 also together with your picture perfect pullback to the upper median line, right? And then it just goes from median line to median line. Pretty crazy. And then of course on the 1 minute, it's perfect to the top of the channel. And I had been asked before, why is it I'm using this higher low here? Well, you'll see this a lot. You just got to go back and back test it. You got to go back and find your ABCs and draw them in. If you're not going to make it to the top of the channel, for one thing, that's a sign that it's kind of in a weak spot. But if you're not going to make it to the top of the channel, where are you likely going to make it? Well, you want to also draw from that first high or low right by that swing for your little ABCs, on the 5 minute and the 1 minute, 2 minute, and the small tick chart. Will the channel, Mike is asking, will the channel copy work minute to tick? Yeah, it will. I tested it a little bit. I believe it works. As far as the testing that I did, it works fine, but you'd have to double check. I mean, we could come back and look at that here in a minute once I go through a couple of these examples. But yeah, I think it's fine. Have you tried it, Mike? The new copy indicator is going to be flawless. So, I mean, the whole entire system is going to be so much more easily managed. The number of lines of code and complexity in this thing is just astronomical, which leads to the more complex, the more lines of code, the more potential bugs. So we've essentially cut it into about 10%. So whereas we had, well, even more than that, we had over 1,000 lines of code just for this trend channel. Just to be able to do that, it's 1,000 lines of code, and to be able to update it and all that. It's now 12 lines of code. So from 1,000 to 12 with a new drawing system. So thereby, with all of that, everything should be completely flawless. So that's, once I get some beta testers set up, we'll start verifying that. And then we'll be able to do all the extravagant things that I want to get done, which I know somebody out there has done, because I see these computers coming in and trading this stuff. So I know somebody's done it. So at any rate, we've got the perfect hit right here. Now the signals are firing off right here. But see, that's, you haven't had any sign of weakness yet. And that's a problem sometimes, waiting for that sign of weakness. You know how I talk about the end of a C wave is oftentimes a V top or a V bottom. Well, technically it is on the 5 minute, and that's where it gets tricky, knowing which area your trade is coming from. Is it coming from the 1 minute chart in this case, or is it coming from the 5 minute chart? All right, we're going to iron that out as mechanically as we can, but it's going to be dependent upon the number of bars. So if this correction is taking up, on the 5 minute chart, it's taking up 38 bars. All right, on the 1 minute, obviously it's 38 times 5. So 5 times 4 is 200, minus 10 is 190. So it's 190 bars on the 1 minute chart. So which chart would you ultimately say that the trade is occurring from? Well, I would say it's occurring from the 5 minute. All right, because it's between the correction that, it's from swing low to major swing high that I'm trading. That's 38 bars. So I would say between, I think I'm gonna say between 30 and 90 bars. Right, over 100, then it's on the next chart down, meaning faster. So if it's 100 bars, I'm sorry, slower. Let me say that again. Let me reword it differently. If the trade is occurring, let me try it one more time. The correction that I'm trading is right here. So if this is a correction, if it's an ABC up, which it is, we don't know that until after the trade matures, but it is an ABC up. Where did the correction originate? Well, obviously it originated right here. This is the beginning of it. We traded down. We're correcting back up. We're expecting to move down and out of it the way that we came into it. So we're expecting something like this to occur, correct? Correct. We may not get all the way down below that low. That's ultimately what we're looking for. We're looking for at least a break of the B wave, right? All right, so if it started here on the 20-minute chart, it's much less than 30 bars. It's only 10 bars. So I need to look one chart down, right? If it's more than 30 bars on the 5-minute, but it's less than 90, I'm going to say the trade originated on the 5-minute chart. And then I fine-tuned it on the 2-minute or the 1-minute or the tick chart. Does that make sense to you? So that's the way we're going to document trades from here on out once we get all this stuff finalized. Which chart did the trade originate from? All right. That's why, you know, you're going to want to be documenting corrections and what your thought process was for entering that trade and why we had a, you know, pretty strong move down here on the 5-minute and then a overlapping set of waves and an ABC up. Okay. Does that make it sense? Yeah, it might be a 78.6. Looks to me like it's between 78 and 61.8. Yeah, it's right at 78. So yeah, that's just one more thing you could add in there, but not something I was worried about at the time because the volume 100% confirmed that demand supply was coming in right there without a doubt. All right, so we're saying that the trade originated on the 5-minute. So then if it originated on the 5-minute, then chances are if it is a C wave, oftentimes a C wave is going to make, whoops, a V. So you may not get any kind of divergence on that chart that you're trading from, but on the faster chart, say on the 1-minute, you could get diversions. But what I'm getting at in going through all of this spiel up until this point is you'll hear me say if the market is in a very strong position, occasionally I will miss a trade like this. I missed one in the 6E the other day because of this. I want to see a sign of weakness before I get into it. If we're going straight up, and we're not looking back, that's very risky to enter just like that. But if we first get an attempt to move lower, as we do on the 1-minute chart right here, and then we go back up to test that high, and then, you know, get even closer to the areas that I'm looking to get to on that next stab up, which we did, then I'm in a much better position to enter that trade more safely. I have, obviously in this case, I have many more areas behind which to put my stop to protect the trade. And I can feel confident about it. I can, you know, not be as on edge about whether I made the right decision to take that trade or not. So regardless if this failed or not, it was a good trade, it was a good area, and I had all the confirmation that anyone could ever hope for. And here we got divergence, and we had a huge amount of volume come in right here on the 2-minute, and your upper median line on the tick chart. So it was all just really very clean and beautiful. I posted it in the HIP chat room if you want to look at it, for those of you that are in the whatchamacallit, trading room, as it were. Yeah, Mike, we are going to be able to extend the lines. It's called is infinite. It's the new method he created to be able to do that. So we couldn't do it with the current version of Ninja with their drawing methods, but yeah. So we'll be able to do anything that you want to do. Anything that anybody would ever want to do, you'll be able to do with Ninja. So we're taking it and making it a proper platform for market geometry. And we're going to add in the GAN lines as well. Something I used to do a lot. Mark in the room still does it. I just kind of dropped it when I started using NinjaTrader, since they didn't have the best set of tools to be able to do that. But now that we can create our own it is worthwhile, at least for the ES. I'm not 100% sure what the settings would be on a 5-minute chart for crude oil, but on the hourly and the daily, I would just have to kind of break it down. But that's the problem with Gann angles. You have to know the exact ratios to use, otherwise you're not, it's just going to be random. So at any rate, that's one entry right there, one signal, right? So you're not getting green and red out of Bloodhound with these templates. These templates are basically just kind of a starter version leading up to what we're going to be introducing once this thing is finalized. Excuse me. So just to get you familiar with how this all comes together, this is 4 of 4. So all 4 charts have to be in agreement. When I set it to 2, then of course you have, signals everywhere, which is not helping anybody with anything, which is why we really need to step this thing up and get direction out of the channels, know whether we're sloping up or down, whether we're coming together with a median line and a channel line of the same set of geometry, or 2 opposing sets, things of that nature. So it's going to get into a level of complexity that is really going to grow exponentially with each chart that is added. Anyway, that's beyond what anybody needs to understand, I guess, but it's getting going to be pretty heavy. So anyway, so that's one good example, and that's the most current one that we've had here. Now, on crude oil, we had a couple of mishaps I did this week trying to short crude early and not waiting for the major areas. So I was trying to short based on larger tick chart and the 5-minute a little too early. So what I was trying to do is I was trying to short this guy right here. And I was saying, well, we had a sign of weakness, but yeah, it was down here. Maybe that's enough. But no, I was shorting this upper median line. We had some other areas, not as pretty as I would have liked it, and way, way strong. And what does it do? It goes to the next signal that we'll be programming out, which is where the where the warning lines overlap. So you guys, you know what? I don't think I invited you to the last training webinar. Those of you that own only the toolbar, but I will go ahead and give you the link to that, even though we go into some other stuff. But let me just go ahead and send that to you, because it'll probably be worth your while to watch what we've been kind of documenting with the toolbar, with the warning lines. So that's that in the Zoom webinar chat. It's the session we did Tuesday, 14th, on the warning lines. I go into more, I go into the faster charts in the second half of the presentation, including the volume and all of that. The first half is mostly much larger time frames, and then faster charts near the end. So kind of like working our way down. But anyway, here, had I waited for a deeper correction, not getting so antsy and, consistently early, there's your minimum that we're looking for, that 38.2 of the third wave. I would have caught this 5th wave down, because we have, what do we have right there? This is another very particular signal we're programming out, where the median line intersects the channel line. And that's right here where both warning lines are intersecting, which is another specific signal. So to have both of those at the same time and price on 2 charts from 2 sets of swings is Pretty cool, to say the least. Right? What have I done here? This is what I'm looking for right there. Low to low. And this, I'm going to have to make some sort of allowance. You see how, well, it will be made allowance for because these aren't going to stop plotting right when they're touched like they do now. You see how they stop plotting? The second one is touched, the warning lines will stop plotting. So these are going to, I've got a much more strategic way of drawing all of this stuff and eliminating lines once they're no longer respected, stuff like that. So that's just a very amazing spot. And the only problem is when we have a move up like this with no retracements in it, you know, minimal retracements. Of course, this is a C wave up. And what is a C wave? Always, without fail, unless it's within a triangle. If it's a terminating C wave, what is it always? It's always 5 waves. It can be an ending diagonal. That's possible, which is going to be a little bit different looking. It's going to be a wedge, but it's still considered an impulse. It's always an impulse. The waves might be overlapping, especially on faster charts. It may not trace out a perfect, you know, Elliott wave, but you're going to have a subdivision of 5. You'll be able to see that. Maybe 7. It may look like 7 or 9, but you'll be able to see the impulsive move within it. And of course, that's a big ABC of what the big 4th wave. And then we're looking for the 5th down, right? And it may have ended up becoming something else, but at the time, that's what we're thinking. And that's all that matters. And we're looking to do what? Take out that low. And we did that in how many waves? Strange. I don't know why someone would ever think any of this stuff works. Clearly doesn't. So it's just a matter of waiting for the areas, you know, trying to sit there and chill out, not be an idiot. Sometimes it's difficult. At any rate, when we get to the faster charts, it becomes a problem when you have such a huge move up like that. But it's still, somehow, it manages to trace out a channel. It just does so, you know, it breaks this one, which of course we know immediately we're in an impulse in such a steep move like that, as it were. And then we make it up to the warning line, the 100%. We break that. So once we put in a new swing high and we come down a certain number of bars, 7, and then it starts coming back up, this new channel line begins plotting. And what do? We move right up to it, bounce off of it, move up to it again, and we have our bearish divergence at the top. In this case, I believe it was actually volume divergence from here. And then we had that big reversal bar on high volume on the 1 minute right here, which was at 10 o'clock. And then on the 1 minute, you have drawing to the previous major swing low here. And that's where another ABC originated from. So I'm drawing from the end of that move down before that ABC to the ultimate low. So the penultimate low to the ultimate low. And that gives me the warning line of the median line up here. Of course, it does go through that, but that's giving me my kind of measured move, if you wanted to call it that. It's not your typical one-to-one. Although in this case, it might have actually been, I think it was more like 1272. But I don't have that one on here. Yeah, in this case, because it is not so steep, yep, it's a measured move. And it just breaks through that a little bit right into the areas on the 20 and the those warning lines on the 5-minute. Okay. And then here, what I'm doing with this strange looking trend line here, what am I doing? If this were Elliott Wave and I'm looking for the end of a 5th wave, one of the rules is draw from the starting point. So if this were 0, then this would be the starting point. And then 1, oops. Just depends on how you want to count this, but this is kind of how I would like to count it. You could call this 3. But it's for the sake of what I'm doing here. We're calling this 4, as this is wider to the right, if you want to call it maximum excursion like Timothy Moore's does. See if we're drawing out, this is the widest point here. Then looking at these parallels, this is wider than this swing low. So we'd much rather use this as a 4th wave low in this case than this, simply because of the nature of the grade or the slope of the trend line. All right, so I'm going from 0 to 4 in an attempt to find the end of wave 5. And what is the end of wave 5 going to occur on? A parallel from 1 or 3. So if I have a parallel, let me just erase some of this. If I have a parallel here with this R button from 1, and I have one from 3, 5 is typically going to end on that parallel line. And what does it do? It overthrows it here. You're thinking, well, something else is going on. But no, it comes back in and then goes back up and stops on it. And that's the high right there. And then we get that big high volume reversal right there. If we're looking for all 4 of these charts to be in agreement, then, you know, it would be kind of hard to find that area without drawing this channel as we have here. Right, and where did I draw from? I drew from the previous major low, which was there. Right, and we do have that warning line up at that bar, which is why we're getting the signal where we are. And she's using bleach. Whew, gosh, I'm gonna have to get out of here. This stuff kills me. So we've got everything coming together up at the high here. The major zone, of course, being that 20-minute chart there. Right there. All right, I think we had a question on this somewhere. Surajit is saying, almost looks like you could have a fuzzy logic classifier which could activate on confluence of weighted signals and generate selectable high probability. Yeah, that's, yep. That's what I'm shooting for, man. That's exactly what we're shooting for. I don't know that I want to actually give it out, but I guess I will.
There's a couple of setups on ES.
Oh yeah? Hey MJ. I can't today, but I could tomorrow. You want to just write an email into support and I'll meet you tomorrow sometime in the morning. Let me see, I'm pretty sure we had another question here. So evidently I'm holding this over the weekend and I don't really want to, but now I am, so. Dan, on the waves, Greg is asking, once I place them, I have trouble rearranging them on the chart. Yeah, Craig, it's because of the snapping, dude. It's these 2 green buttons right here. So when that S plus is on, snap mode, bar and price, it's going to snap to every bar. When that S minus is on, snap mode disabled. You can drag it around. See? Mm-hmm. Yep. Larry is saying, you mean the jet that just took off? Yeah. Yeah. She's breaking out the bleach. All right, so honestly, guys, I'm gonna have to call it because I'm throat's closing up now. Nick Gibb is saying, hey, how's it going? Have you made a swing template for YM? Tried several times to get that ES swing template, but for the life of me, I can't figure out why I have all the others, but not that one. Yeah, tomorrow. Just find me on Skype tomorrow in the morning. Yeah, I'm not sure why you wouldn't have it. It's in the installer. It's, 1 second. So if you guys have some questions, I think we wanted to see if it could copy from the tick chart to a minute chart or vice versa. Let's see. Did you have an example you wanted to show?
Oh, on ES, I got a couple cool setups.
All right. Here, I'm going to pass it to you. Corey's going to show you guys one. Or you're not signed in. Never mind. That's all right. Let me just open this. Where are you? I have the CL swing trading, which will have to be updated to the 8. Do you have the CL one, Nigib? Okay. Well, watch how I do this. So what I'm going to do is save this as YM. It's very easy. You just change 4 charts and change the charts in the 4 solvers. Actually, there's quite a few more charts. Well, there's 6 charts. 1 second here. Let's see what else we got. There was another really good example in Crude just following. We had another exact same thing happen to me like we had here where we went right through the upper median line like we did here. Same exact thing happened the very next day right here. So if I delete all of that and this, I don't know why I couldn't wait for top of this one. Where was it? It was right here. That's what it was. Yeah, I don't know why I couldn't wait for that. Of course, that was the report on Wednesday. But we had I think it was a volume divergence here on the 5 out of the report, which was, perfect. 5 up 4C. So we had the same exact look that we had before. Right here, we had the same exact thing. And what couldn't we do? We couldn't hold the upper median line right here. Couldn't hold that upper median line. But we did come right to the area on the 20. And let's see what else we've got. We got the upper median line right there. You see? So we went right through this upper, only to find an even better area of resistance on the larger set of swings from penultimate low to ultimate low, which is exactly what we saw on the other charts. And then on the 20-minute, you've got the major end. All right, so the difference between this, why am I not calling this the penultimate low, right? What's wrong with that? What is this? That's not the end of the impulse. It's the end of the B wave of the correction. This is the end of the impulse down. Do you understand what I'm saying here? Why is this the important low and this is not? That's the B wave. It's part of the correction. That's not part of the big impulse down. This is part of a correction. That's why we use this low and not that low. Okay? Just take that one home if you don't understand anything else. Always think in terms of impulses and corrections, impulses and corrections. Even if it messes you up a few times, you're going to see this over and over and over. So it's not going to work every single time. You're not going to make money every single day. You may not even make money every single week, but there's no reason why you shouldn't be up by the end of the year if you're using these methods. If you can't make 100% a year, then something's not right. You just need to keep practicing. But our aim is to make 100% every couple of months. So anyway, that last C wave up was a beautiful 5 waves up. And it came to our perfect spot, even after and out of the report. And we just do what? What do? We just tick that high. We love to see that. Pour in a strong push down, and we get a nice snap back and a correction. We love to take out one of the previous major highs of the day or of the overnight session or of the previous day so that we can run some stops, and then they can build a larger short position and we can watch them slay everyone's accounts. And then it comes right down to the tick, to the trend line from low to low. It's just a matter of being patient and having everything in place. Really, the best thing that any of you can do with your time away from trading, and you'd actually be better spent if you're not doing very well, to stop trading in sim, spend all day, 4 hours in the morning or 10 hours a day if you have to, and mark up historical chart after historical chart using hindsight to your favor. So people want to say that it's bad to do that. That's the way that you make improvement. That's how you get better at this stuff, is using static charts and seeing how these swings come into place at these areas of market geometry, and then you get these major reversals where all these areas overlap. And it's just amazing. But if you'll do that consistently, you'll make progress, and then you'll start to see these things happen in real time, and then you'll start to anticipate them happening. And that's when you start to make money. Okay? So I'm going to show doing the copy, and then we'll call it a weekend. Well, I guess you guys will call it a weekend. I'll call it a Monday. And let's see. So from the tick to the minute, Mikey. Trick is to recognize it without the rest of the stuff. Chart. As far as the market geometry areas, yeah, but if you can have that relative volume come in there as well, then you've got a much better chance of that area working out. So let's look at this. I'm going to put the trading channel copy. Let me see. On the 1 minute. Let's see, what did he say? Copy to the tick. By the way, we'll copy work minutes, ticks. I don't know. I'll put it on the minute. Copy it from the basically you want to copy from the higher time frame to the faster time frame. So if the faster is the 1 minute, trend channel copy. We want to copy from the tick chart, 789 tick. So if I draw here, it should show up right away. What's going on here? All right, let's use less bars. Copy from here to here. Yeah, looks like it's not working very well, Mike, from tick to minute. No, looks like it's going to be best from minute to minute or tick to tick. Yeah, it's having a hard time finding that low. There is a little bit of a small algorithm to try to find the nearest low, nearest high, but that's within the channel itself. It's not within the copy. And the problem with the copy is from tick to minute, because of the scaling of the x-axis, it's a little bit of a problem. But anyway, it'll be it'll work correctly in the next version. Okay, all right, guys, we're gonna call it a night. Any last minute questions? Yep, you're welcome. All right, guys, hope everybody has a wonderful weekend. Talk to you on Monday. All right, thanks, Greg. Yep, you're welcome. Thanks, Larry. All right, Wim, Sergi, Raymond, Don, Bobby. All right, you guys have a good weekend.